Well, the first half of 2022, the most relevant fact has been we keep growing our customer base in a significant way, particularly on the loyal customer side. That is extremely important, is the key factor for our success in commercial banking. So having said that, this translates into higher activity levels, both in loans and deposits. We kept growing significantly in both sides of the balance sheet, and this has been translated into higher revenues, as you can see in our P&L. In a period of high inflation, it's extremely important to keep the costs under control, and we are growing costs well below inflation that make possible to continue to make efficiency gains. Our cost income is heading towards our target of 45% cost income for this year. Finally, on the cost of risk, the cost of risk right now is well under control, and we are inside our range, our expected range for cost of risk. With all these elements in our P&L, we delivered excellent results in the second quarter that make the first half of the year a very good first half with excellent results. Finally, these results, taking into account our payout policy to our shareholders, translated to a more than 12% core equity tier 1 that is very much aligned with our target. So all in all, very good quarter, excellent first half of 2022. Finally, wealth management and insurance, private banking is doing well, very well, I should say. While the asset management is suffering more in an environment in which valuation in markets are trending down. Finally, insurance, we are growing around 10%, the policy premiums. That is a good mark for our insurance business, where, as you know, I am very optimistic about the future of this business. In the current scenario, we are facing a high inflation, relatively lower growth, and finally higher interest rate scenario. Those are the three elements that we need to be combined when we look forward. So with this scenario, we expect to keep growing the revenues on the back of higher activity and translating this into our results. So having said that, we need to pay attention to particularly two items in our P&L. The first one is cost. Actually, with high inflation, it's very difficult to avoid that this translates to cost, but we need to continue to make significant productivity and efficiency gains in order to make sure that we keep our cost-income ratio to go down from the expected 45% for this year. And finally, the cost of risk. If GDP growth is lower, with higher inflation, we need to pay specific attention to the cost of risk. All in all, with all of this taken together, I think that we are in good track to deliver our full year results, and not only full year 2022 results. Looking forward, the bank is in a position to deliver sustainable and predictable results on the back of our diversification, on the back of our business model.